In this video, traders, we are going to look at using high leverage with a small position size. Does that make sense? Stay tuned. Hey guys, warm welcome to you. All right, so a question came in from a subscriber, a viewer, on one of my videos, Forex Student, his name is, and or he or she, and they said, would you possibly recommend high leverage with a very small position size? I can't get my head around how leverage is so risky of people place a stop loss equivalent to 1% of their account size. I don't see why you can't have a stop at say 1 ATR and have a small position size within that. Can you explain or elaborate on whether what I'm saying makes sense? As I'm only a year into studying this and I really want to knuckle down with it for 2020. So I appreciate that question. Actually, it's a good question because very often we talk about leverage as being such a negative thing, and we've got to be careful about leverage, and maybe we need to reframe the way that we look at this. Maybe we need to look at this from a different perspective, because in actual fact, the issue comes with the risk you're taking. If you look at leverage as a tool and you look at capital at risk as a completely separate metric. So leverage is just something the broker says, hey, if you want to control £100,000 worth of stock, worth of currency, worth of commodity, we'll let you put up 10,000 or 1,000 or $500 or whatever that number may be. That's your leverage. Now, that's just a tool. The advantage of having access to higher leverage allows you to control more notional value, so it allows you to control more bigger positions with a smaller account size. That's it. Now the decision then is up to you as to how much you control. Now if you start going crazy and you start saying, well, I'm going to use the maximum leverage that's available to me, then you can be in a tricky position, because if you are offered a high amount of leverage and you use that tool to its full extent, that's when you can get into trouble. We've heard Forex brokers offering like 1,000 to 1 and some crazy leverages. And the trouble with high leverage then is that when you have a really high position size relative to how much you've got in your account, it only requires a small move in your actual position to make a devastating impact or really good impact, and that's where the challenge is, into your account. It can move up a little bit, you can double your account, or you can lose it in one trade. So that's the danger of leverage if you use the tool and you turn the volume right up. Now, the issue we have there is that you can still use that as a tool, but you don't have to go crazy with it. So if we look at this example, right, let's say you've got 10 grand of risk capital, just for argument's sake, got 10 grand in an account. 1%, if you're risking 1%, is $100 on a trade. 2% is $200 on a trade. If you do 10 trades, you've got $1,000 risk. Now, regardless of what the leverage is, even if the leverage was 1,000 to 1, as long as you are still using the risk parameters that you've set out for yourself, it doesn't matter if it's 1,000 to 1, 1,000,000 to 1, if they let you control £1 billion worth of currency for £2. It doesn't make any difference. If you are still sticking to your global risk rules, the leverage is it's irrelevant. The only issue you have with leverage is, can I get enough leverage from the broker to enable me to trade this? I want to take 5 trades at a time. I want to take $500 risk at a time. Can I control however much I need to control? And the answer to that is probably going to be yes, unless you're going crazy with your risk. But now, if you look at this example, let's say you've got 10 grand again, you want to risk 10% of your account, 10 trades is going to wipe you out. This would be using too much risk and too much leverage, because even if you could find a broker that would allow you to do this, you're probably pressing too hard. Now, I know I've done videos where I've talked about sometimes you've got to take additional risk and you've got to press the throttle a little bit. Let's put that to one side for now. Let's just look solely on a kind of textbook style of risking 1 to 2% per trade. This is using the tool too much. You're basically now leveraging yourself right up. And even if we put those two separate, the actual problem isn't with the leverage, that's just a tool the broker's offering you. The problem is with the risk that you're putting per trade or per day, per week, or whatever you've got. And by the way, the final thing, guys, with this is that this may be your risk capital, but you may need more in your account to manage the positions you want. You may need 50k in your account, but just because your account says 50k or 100k doesn't mean that's risk capital. You might say, well, I need to have more capital in because I need more leverage. Maybe you're trading some items or some markets that the broker doesn't offer you big leverage, in which case you have to have more capital in, but you might still be only wanting to risk 10 grand worth of risk capital. So risk capital is different to trading account balance, is different to trade risk, is different to leverage. So the question going back to using high leverage with a small position size, yes, perfectly fine. And that's the way to do it. That's the key to do it, is to say, okay, well, I may well use high leverage, even if I've got a 10 grand account, I might use all of the leverage that they offer, but I'm still only having a small position size. That means my deposit is going to be small. So it means the margin required is going to be small. It might only be, you know, $500 or something. That's fine, but the key is the risk capital. It's the amount you've got at risk, or the risk you've got per trade. So you can use the leverage, just means that don't go crazy. Don't start adding and adding and stacking loads of different position sizes just because you can. So summary, guys, leverage is the tool. And your risk is what you really, the metric you should be paying attention to, because that's the key. If leverage is high, fine, use it if you need it, when you need it, but the risk per trade, the risk per week, the risk per quarter, total risk capital is the number one thing you should be focused on. And that's the thing you can protect, and that's the thing you can control. Appreciate the question. Take care, guys. Bye-bye.